For people who are new to the show, we started a British-only portfolio, which isn't Steve's portfolio. It's something we've both picked, and we picked it back in December, and we put a little bit of our own money in it, just to obviously make it, skin in the game kind of thing. And this is essentially the Q2 update for it. So it's been going a little bit more than 6 months, but here's where we are. And I'll give you a reminder of all of the stocks that are in the portfolio just because it's been a while since we last spoke about it in depth. But it's Bloomsbury, Diploma, Dowlais, Judges Scientific, Wise, AB Dynamics, Admiral, AG Bar, Ashton Technology, Barclays, Bunzl, Croda, DCC, Diageo, Experian, Games Workshop, Glencore, Greggs, JD Wetherspoons, Money Group, NatWest, Porvair, Primary Health, Renishaw, Rentokil, Rightmove, Senior, Spirex Sarco, Vistry, and XPS Pensions. Now, I will post a link to both pies in the comment section as well. So obviously, if any of those are a little bit, you didn't understand them, there'll be a link to go and see them all as well. We double weighted some of the holdings. There was basically a couple from each of us and then one that we agreed on. The ones we double weighted from my side was Bloomsbury and Judges Scientific. From Steve's side was Diploma and Dowlais. And then we agreed to double weight Wise as well. And I probably think it's appropriate here to mention that only one of these stocks made our top 10 performers. So look, here's the top 7 for you. It was JD Wetherspoons at the top, NatWest in second, then Barclays, Admiral, Rightmove, Games Workshop, and AG Bar. These are year-to-date performances that I'm going to give you now, but so they don't include December. But JD Wetherspoons up 28, NatWest 25, Barclays 24.5, Admiral 24.5, Rightmove 21, Games Workshop 19, AG Bar up 14%. So doing pretty well. And if anybody wants or anybody's counting, Steve's beating me 4-3 in that list of 7. For the bottom 7, Renishaw down 14.6, Glencore down 19.5, Ashted Technology down 22.37, Bloomsbury down 24.11, Diageo down 27.6, Bunzl down 29.44, and Greggs down 32.04. So it's been a pretty sour bottom 7. It's 4-3 in Steve's favour in the bottom 7 too. So Steve's doing a little bit better than me in both aspects. Now, Steve and I would like to put in here that we were fairly unlucky in our pick of Greggs, which we thought was a bit of a steady Eddie and fell 30% the day after we picked it or something like that. I'm not sure how much of that's entirely our fault. I don't think anybody saw that coming, and it's still yet to recover. So I talked about the doublers. We may as well touch on the doublers so we can just see how they're doing. So Bloomsbury, which was my pick, down 23.12. Diploma, and these are actual performances, sorry. Diploma, which was Steve's double, is up 6.64. Dowlais, which has been acquired, another of Steve's, 5.71. Judges Scientific, 2.27%. And Wise, up 14.76%. So not doing too badly there. And so in terms of against the VWRP, it's actually beating VWRP, which is pretty interesting. If we go back to December, VWRP is a couple of percent behind us. So despite some of those dodgy performances, we're not doing terribly badly. However, if you were then to compare it against the FTSE 100 and the 350, we're shipping about 6 percentage points. So it's a pretty hefty difference. I think it's early days, Steve. I think we've had some sour luck. But I also think we're at the 6-month place. This is where we said we would have a look at rebalancing, maybe in reinvesting dividends, but also looking at what's on the chopping block for us and what we could potentially improve. So I'm going to put forward some stocks to Steve. We're going to have a think about it and let you know what we do next week. But essentially, one of the stocks is forcing our hand. So Dowlais has to go because it's being acquired. So that's a good time to get rid of that one. We've also considered AG Bar. We think that we've caught quite a bit of the upside there. It's up about 8%. We don't think the further upside is as attractive. Diageo is one that we both feel a bit funny about at the moment. I think I definitely feel more strongly than Steve about this one being something I not really any longer trust to perform kind of to the ideas that we had back in the thesis essentially 6 months ago was that we'll get a good turnaround plan and Diageo will turn around. And I don't feel like we're there. Steve may feel different. The other one that we're thinking about getting rid of is one of our better performers, which is NatWest. And I know that is a little bit of, cutting the flowers. But we have no intention of watering the weeds with that one. We think going into a double rate cut environment, do we want to hold two banks? Is that sensible? And potentially that might be a no. Steve, anything you want to add on that or anything you want to put forward?
A couple of quick thoughts on that. In terms of the return, I mean, to coin a phrase that we've heard elsewhere here, considering what we put in it, this has done pretty well. I mean, considering that one dickhead tried to put Bunzel in it, which went down almost immediately, and another dickhead put Greg's in it, which went down by even more somehow. It's sort of mildly surprising we got anything left. We did quite well to pick two banks at the top and JD Weatherspoons, which is. I mean, they haven't managed to offset the damage of those two things between them, but they've done their best. The double-weighted stuff has worked reasonably well. The thesis with Dowlais was always that it was going to be kind of acquired. It was always a kind of stock in transition. The hope was that it would sort of sell part of its business for quite a lot of money, and it's actually ended up selling all of the business for a weird amount of money to a company that's largely paying them in stock, is smaller than them, is retaining a UK listing that I have no interest in whatsoever, and is having to chuck in cash to still be the majority shareholder in the company that when it's joined together. So that's, I mean, as acquisitions go, it's a pretty underwhelming one, and it's a good reason why you don't bet on acquisitions for these kinds of things. They may not happen. I mean, in this case, if it fell through, I'm not actually convinced the share price would go back down very much because it had pretty much, I mean, it was showing signs, not that I read these particular tea leaves or anything, of having bottomed out at the time the bid came in. It was starting to come back quite nicely. And I had it in my own personal portfolio and got rid of it. As far as Diageo goes, I don't think I see any particular signs that are encouraging in the near future. The last trading update showed 6% growth or so. And I heard a different podcast, because we don't criticize by name, but I did hear it noted that they said they thought this was not growth pulled forward from tariffs. Deborah Crew said in so many words this was growth pulled forwards by tariffs. And when I looked at US inventory levels at wholesalers, they are extremely high. Which tells me that's not good for demand going forward. It tells me you had your kind of demand shock, and you're allowed to have a demand shock. No one's complaining about that particularly, but the market didn't view this as a likely sign of stable turnaround here. And I think they were right to in this situation. I do own it in my ISA, but I've got a longer view than I have with these things, and I'm not thinking about stuff to change. AG Bar was another one of mine that I think, yes, I thought there's about 30% higher on this from 600. We've had about 15 of those percents. Maybe leave some money behind for the next person to take over on that, and there may well be better opportunities available here. So I'm pleased the Britbox is outperforming the BWRP. I'm sort of surprised it's outperforming anything, given some of the bottom end things which have been really quite disappointing in a few cases. I know it's sometimes just bad timing with things like Greg's and Bunzel. In both cases, I think it's just unfortunate timing. I'm not sure they're as bad as they now look, and there's potential to do something about that when we talk about them a bit more next week. But given those two kind of big losers in the first place, it can be quite hard to have a portfolio do well after that. Maybe there's a lesson, and that's why we kind of buy a range of different things.
Yeah, I think that's generally the problem, Steve, is that we're about sort of 50-50 green and reds at the moment. And which is why we're essentially flat. Wherever we've got a couple of percent gain, we seem to have a couple of percent loss. The thing that's really hurting us is that just Bunzl, Diageo, AB Dynamics, Bloomsbury, Glencore, Greggs, Spirit Sarco even have not had very good years so far. And I think none of those stocks are particularly they're not the worst stocks, Steve, that we could have picked. And I think there's probably brighter futures ahead. Steve, we've got a little short list of things that we're considering. What's on that list?
Well, there's a few bits. We'll say what we do or eventually decide on next week. But things that kind of make the shortlist include some of the stuff that we already own. So Greggs and Bunzl falling like that, I kind of hinted that we thought maybe those drops were kind of unjustified. So there's always a possibility to add to them. And after that, it's two stocks that we've talked about on this show before, and one that I don't think we've got into much detail on before, or even really mentioned in passing. So Renew Holdings, which I mentioned last week, and you fastened onto there, Steve. Beeks Financial Cloud, which you mentioned quite a few weeks ago now, following a listener request, I think, and we had a look and we quite liked what we saw in the case of that one. And 3i, which I talk about every time I get half an opportunity. They issued their AGM the other day, actually, and that looked pretty positive as well. So we can get into more detail on some of those, I think, further down the line. But that's our current shortlist of stuff. That's not to say it will be the same next week when we kind of announce what we've done in our, I suppose, portfolio update part 2, Britbox and Eurobox episode. But that, to me, I think is an interesting list of stocks to be considering at the moment.
Yeah, and we'd be interested in anybody else's thoughts in the comment section as well. I tried to sellotape Cranswick in as well, which I don't think you mentioned on that list, Steve.
It's the one we haven't talked about. Sorry, yeah, I didn't mention that.
So if we'll come to a decision on what to do with that in the week, and we'll let you know. But if you've got ideas in the comments, please let us know, and we'll add it to our list of considerations.
You've been watching a segment from the Playing FTSE show, brought to you in association with our favourite broker, Trading 212. For the full version of the show, check us out on Spotify, Apple, or wherever you get your podcasts. And if you open a new account with Trading 212 using the link in the description, there's a free fractional share in it for you. Just make sure that you use the code FTSE when you sign up. Terms and conditions apply, and do remember that when investing, your capital is at risk.